All right, good evening, guys. Ken at Tortoise Capital. It is the nightly strategy podcast for December 14th, 2020. So welcome aboard. Well, let's see what we had today. So a couple things went on today of note. One of them is that what used to be the 10-day low down here at about 360 moved up to 363. So what we have right now is just about 2.2% between the 10-day high, which was also the all-time high, and the 30-day high at 371, and the 10-day low, which is going to be in play here for a little while at 363. So that's only 2.2%, and that's like 2 daily ATRs of range. That is an extremely tight range. I mean, so the last time we had that was probably in this space, and that tension was resolved to the upside. And you'll notice that same price pattern held, that it looked like this and kind of rolled over, and that gave us the RL10 rolling over and then rolling up. So we're kind of looking at that here as this is now rolling over again. There was a short moment here where it opened high.
Denny?
Yeah?
What was that?
I don't know. Just a minute. Something in the laundry room there? Oh, it was a fan. No worries.
What?
It was that circular fan. It fell over. No worries.
Okay.
It's no worries. Sorry about that. Little moment of magic. Sonny asked me, when I draw that box, do I use the high and low of the candles or the closing? I just draw like a visual plus or minus standard deviation box. I look for the fat section of it and keep the outliers out. So when I draw that box like this, yeah, there's a little outlier here and an outlier here, but it gets most of the stuff in there. And that's sort of a statistical view of the world where I'm actually drawing a visual data box. And so if it looks like this, there may be, I usually draw it so that like there's some outliers there, but that the real box is here. And we try to disregard these as outliers. So that's what happens when you adopt a statistical view of the world, by the way. So back to my point. This tension was resolved to the upside here. All right, so we ended up having a nice strong move, and so there was a nice leg up, a rollover, and then this turned out to be the third leg up, and now it's flowing downward. And so we briefly had a gap up opening, and then it sharply rolled over, and the whole day just kind of fizzled out. So we want to kind of be mindful. We want to be mindful of that. By which I mean that even though this tension here resolved to the upside, we're already in the third leg, and we made an all-time high, And so there's no forcing function that demands that it goes higher. And there's an awful lot of gravity at work here that wants to pull it down. And so it finished down here having violated both of the PSARs. Today's PSAR and tomorrow's PSAR, I should say. Try to zoom that in a little bit. So now when we look at this, you know, we're very close to that 10-day low, and that's the last thing that stops it from getting down here to the Bollinger Band mean at 363. I mean, the 10-day low's at 363, I should say. And the Bollinger Band mean at 358. So that's a fast move down to 358. There's no technical reasons why there'd be any resistance on that way down. That's a fast move. And where we are here, we're only at about it's a 2.5% sell-off from that all-time high down to this level. So you can see that's what I mean by, you know, this range compression of 2.2% to the 10-day low. That's really a critical state. And so any breakout here could very easily get reinforced with a second position short if the Bollinger Band mean doesn't hold, and there's no resistance until it gets down to the bottom of the river at Z-1, which is at like 349. So there's a big vacuum here, and and a big move down could certainly easily happen. Now, on the positive side, we can say, well, we're now in oversold conditions on a 10-day basis, because here's the 10-day low, and so now that leaves a retracement and a retest of the 10-day high at 370 as very possible. And could it get there in one day? Yeah, it got this far in one day. So it could certainly get there in one day. So this is we're in a bull market. There's the all-time high, and we're able to buy it at oversold conditions. So there will be some buying pressure, some algorithms that say, yeah, this is a marvelous opportunity to buy. And in fact, you could see some price action tomorrow where it comes down and tests. It comes down and tests the 10-day low and then hooks back up towards the 10-day high. So we would be mindful of that as an opportunity to kind of buy in the dip, you know, when the price dips and then crosses back above the dragon intraday. We could see that as a buying opportunity. So in retrospect, then, when we're trying to put all this stuff into context, you know, this is I see this as a critical state. There's a equally likely probability of a strong move in either direction. The least likely move is some kind of choppy sideways. I think it's much more likely for either the bulls to win and start retracing today's move, or the bears to take advantage of this momentum, this downward slide. I should probably draw that in red, shouldn't I? You know, this is really like 5 days of selling, like the 12 days of Christmas. Now, the last time we saw that, it was here, and it reversed, got it. When we saw it here, it reversed in a powerful way. But this is high. This is already, leg one and leg two. How much more enthusiasm is there? Or are more guys likely to say, you know what, I've enjoyed this move all the way up, and I'm just going to I'm going to protect my profits more so than buying the breakout or buying a resumption. And if you just wait for the 10-day high to go, you're only giving up, 2% on the daily chart. And you may actually be able to get a move intraday tomorrow or the next day, and then really start adopting the swing position once it gets above that 10-day high and 30-day high. So that to me is there is a lot more patience available on the long side. Like I think we would be looking at a break above 370 would be decisive, and a breakdown below, let's call it, 360 would be decisive. So let's just remember, this is all the yellow zone in here and a very tight compression on the 10-day. And so this is a time when tactical trading is first and foremost the importance, by which I mean intraday. And that the swing time frame, that larger time frame, really should only be on your mind for the market unless it gets above 370 or below 360, which is that's about a 3%. That's about a 3% range. And that's why I say the daily or the 10-day range of 2.2% is so tightly compressed. This is exactly what a critical state looks like. I love this one because it's already it's oversold in a bull, so the upside is clear. But then it's so close to where it collapses, and it could have another collapse here. Like it could reach the Bollinger Band mean in one day if you took the size of today's move and just lost that much more tomorrow. It breaks the Bollinger Band mean, and now you're on the downside of the river. We haven't been there throughout this entire period, so that would trigger some panic selling in my view. So let's just be mindful of that. All right, let's take a look at what worked today. All right. All right, so let's take a look at our sectors. And the S&P was down 0.5% by the end of the day. Where's my cursor? Come on. Where are you at? There you are. So the S&P was down 0.45. Diamonds, DIA, was down minus 0.6. Treasuries were down a quarter, minus 0.28, and the Russell was down 0.2. So a very tight cluster in here, and all negative for the U.S. Not enough to induce any kind of panic, but clearly no follow through to the upside on a Monday after a weekend. But what worked? Well, let's look at the sectors that worked in the green. So clean energy in Japan were slightly better, still in the red, but slightly better at minus 0.16 and 0.06. Tech was up a third at 0.36, so that's the broad tech sector. And TECL is the triple tech sector, and that was up, therefore, 1.05%. So normally, if you just multiply XLK's performance by 3, you're going to get TECL. So if you're tracking XLK as the S&P tech sector, but you want to play that with some leverage, then a natural place for you to look would be to execute inside TECL to get the advantage of leverage in a liquid ETF. Now, TQQQ, on the other hand, is 3 times the NASDAQ. So whatever QQQ was about 0.71 today. TQQQ, or the triple Qs, is up 2.13. So you can see that the NASDAQ outperformed the broader S&P tech sector. So I like to compare that to see where the tech juice is. Okay, so XLK 0.36, oil up 0.72, the FANGs, that's Facebook, Alphabet, Amazon, Netflix, and Google, up, and Apple, I should say, up 1.08. McDonald's up 2%. We're going to see that trade. So I spent a considerable amount of time yesterday and Saturday night talking about McDonald's as an ideal candidate for a breakout from a critical state. It was like one of the worst performers in the Dow lately, and yet it had compressed to a very tight daily and weekly range, and it was oversold, so that was in a critical state, and so we were ready to play that in either direction. So those weekend videos are worth replaying to to refresh your memory on that technique. And you can look at the McDonald's example as a really good example of how to do this. So we're going to look at the McDonald's trade because that was a decisive move in McDonald's. When the index is down and the Dow is down, but McDonald's is up, that's people buying McDonald's and ignoring the broader market. So that's guys buying quality on sale. So Nvidia was up 2.25. Big movers today in our swing positions in Bitcoin, up 8%. It was up 10% at one point, so it had a gap up and was tradable intraday. And then Tesla just continued to motor north. It was up almost 5% for the day. So we're going to look at both of those in a short while here. But other tech leaders, Amazon up 1.3, Twitter 1.13. That was another one that we talked about this weekend because at $52 it's affordable and it has not had the same kind of explosive moves as the other tech giants. So that one looks to me like a catch-up play. Like I think Twitter wants to grow up and join the FANG index, like its big brothers in Facebook, Amazon, Alphabet, Netflix, Google, and so forth. But so Twitter has some catching up to do. Microsoft was another one that we talked about today. Over the weekend, and so that outperformed the tech sector and outperformed all of the U.S. market indexes. So, in fact, we look both at Microsoft and McDonald's as two oversold opportunities that looked like they had some potential for intraday moves and then possibly leading to a swing. All right, on the downside then, again, reminder that the S&P was down about 0.5%. And then, so we have Simon Property Group down 2/3. So SPG is my proxy for commercial real estate. Healthcare minus 0.75. Then a cluster of sector ETF series. So you got Mexico down 1.1. Finance, basic materials, steel, and emerging markets all down between 1.1 and 1.5. Wheat and precious metals is my proxy for that whole precious metal sector. Gold and silver and platinum down 2%. Brazil down 2.5%. That was a nice breakdown trade that we framed over the weekend also. Brazil is a beauty because it's a frog champion, meaning that it is very directional intraday compared to all these other candidates, and it's very directional as a swing trade. So you get the benefit of strong directional moves regardless of your time frame. So that makes it a perfect candidate for momentum directional trades and for doing hybrid trading if you start it on a day and then it can become a swing. And because it is least correlated to the U.S. or lesser correlated compared to the other big broad sectors, Brazil and Mexico both turn out to be very suitable for both intraday and swing hybrid trading. So Mexico was down 1.1, Brazil was down 2.5. The energy sector down 3.5, oil exploration down 4.1, and both of those we talked about this weekend as having had such terrific 10-day performances over the last 2 weeks that they were now vulnerable to to a cooling off period, and that's what we saw. So now when we start taking a look at the individual companies, you see Virgin Galactic down 17%. That's one of the reasons I love trading that thing intraday only, is because it's just so darn volatile and makes huge directional moves on. It's independent of a lot of the big indexes, and so it's a pure play for momentum trading. Nikola is one of those as well, and it's just getting smashed, down almost 7%. U.S. Steel gave back a lot at 5 3/4. And again, that's one of those that we've been working hard the last 2 weeks, and we've spent considerable amount of time talking about how to protect those outsized profits. And this is an example of why you want to do that. Devon Energy in the energy space, Alcoa in the metal space, Cliff in the steel space hold down more than 3.5. So, and then Nucor down 1.7. So lots of routine follow-throughs after long periods of outperformance to the upside. This is the natural volatile breathing to the downside, which makes swing trading possible and makes day trading possible as well, and that's why they're on the list. All right, so I want to cover just a couple of the intraday trades. So this one, the first one is Tesla, and it's just superb. So the yellow box, this is the top of this yellow box that you see here, was from our trade framing of Tesla on day and weekly charts. And so we said anything over 600 was going to be favorable. And so last Friday, it closed with like a horizontal Z3 pinch over here at like 610. And then today it opened with a gap up, briefly reached a peak at the Z3, sold off sharply to yesterday's VWAP, absolutely the least surprising move of all. That's market makers and guys with inventory that are selling to folks who have buy at market open orders. People that looked at Tesla over the weekend and said, oh, that's really awesome. So they put in their buy at open orders. The guys with the inventory jacked that way up. Then the price collapsed, and some of those folks get chased out of their positions. So they sell you inventory at a high price and then buy it back at the VWAP. This is so routine that it should have its own name. The fleecing of the herd, perhaps. So now, when we get into this a little bit closer, after that morning froth has blown off, let's zoom in here a little bit more. Okay, so now what we have is we have the gap up and it peaks. So the RL10 then rolls over here. It crosses the baby dragon, slides through the dragon, through the VWAP. Now you see that summer, or RL10 is in green there in the summer. By this time, it turns to fall, and it's falling. It goes through the VWAP and comes down and tests yesterday's close and yesterday's VWAP. And right there, it makes a low in the RL10. And by this time, the fall, which is in blue, has now turned to winter. And the winter bottoms out, and it crosses over the baby dragon. It crosses the dragon, we get the RLXD. So I just routinely buy it in that little pocket because I want to buy it before it crosses the VWAP. So I just buy it here. And what I'm really doing is buying that trailing PSAR, as we've talked about numerous times. As this starts marching up the stack, winter turns to spring. It has a momentary pause. It maintains support above the RL270 and above the PSAR. And then by this time, the rebound has been strong enough that it turns to spring and then turns back to summer as it resumes. And now it has crossed the VWAP once more. And now I am very, very relaxed about this one. And I'm going to add my second position the next time that it pauses and resumes. I add a second position. Now I want to walk you through the Wu Wei exit. This is our routine exit management. So on this first entry, our stop is here at the bottom of the RL10 and the PSAR flip. That stays in place. Whoops, sorry, let me get this. That stays in place. Let me put that in yellow so you can see that. Yeah, that stays in place until we get about three dots above our entry. And so at this point, I raise the stop to the PSAR, and then that stays in place until the Bollinger Band mean picks up. And now I'm just trailing it with the Bollinger Band mean all the way up the stack. That Bollinger Band mean is that dashed red line. So as long as this is working, it should always stay above that lagging Bollinger Band mean. Now you can see that the PSAR dots are supporting this thing all the way up too. So we get the second position in. Now I add a third position here once it eclipses this Z3 pinch, because now what we have, if you're playing along at home, is that the Z3 lines have now pinched, because now we are, you can see we're 30 minutes into the day. So now the Z3 lines have pinched, and now when the price has moved north of that, and I've got the same kind of continuous gain that is just powering north, I add a third position in the routine way. It does another pause that it doesn't breach the PSAR dots. I add a fourth position. By this time, I'm feeling I would not be offended if you had seen this price excursion here after the fourth position, and it zooms all the way up, and it's outside of Z2 and very close to Z3, and now starts to roll over. I would not be offended if you took if you decided to take the PSAR sniper exit here and have all four positions in the money. Absolutely nothing wrong with that. You can also you could also have just left, this. You could have moved this up and got to break even and no lose here, and kept that in position and give it a chance to grow. So I don't mind if you take the PSAR exit here, or if you take the PSAR exit over here, but even that's looking fairly strong. So if you just keep the manager exit in, then all you're doing is you just decide that you're just going to use like a time stop. But as long as the Bollinger Band mean is going up, that would be the manager exit. For example, if at any time in here this thing had rolled over and hit that, then I would be all out, all four positions. All right. So that's really the main idea of that routine SSC entry. So I want to show you just what the numbers now look like. So we're talking an entry about 617. This is probably about a $4 stop, just for round numbers. And even if you take that if you take that exit at the PSAR on the fourth one, you're looking at an exit of about 635. So you get in about 618 on a $4 stop, and you're out at 630. Call it 635. That's about $17 on a $4 stop. So that's 4R on the first position. Let me get this one in here. So that's going to be 4 execution R. This one's going to be about 3. That's about 2. And that one's probably a scratch. So that's about 9R in the usual way on a day when the market peaked and then was spending the rest of the day selling off. So the difference between Tesla's relative strength and the rest of the broad market was that Tesla's going up. Tesla is going up while the market is selling off. So that tells you there are people that are committed to buying Tesla in spite of weakness in the broad market. Now shifting to the most mundane of symbols, we can now look at McDonald's, completely the other end of the spectrum, right? So McDonald's is the case where I want you to see the blue dot in here so you can see. So this inner yellow box in McDonald's was the daily trade frame that we built on the weekend review. And we said, so if that broke out of this daily box, then we would be inclined to be long that position. The larger, lighter colored one was the box that we built for the weekly trade frame. So it had to get above 210 to be very interested in it as a weekly swing trade possibility. So in a perfect world, what would have happened is that it would have opened inside that very tight yellow inner yellow box, and then as it goes up, then we would buy a intraday position at 209, and then if it kept going up, we would buy another position at 210 and then commit to a swing trade on it by keeping 1/5 of the intraday position for a swing trade. And then if it had moved up in here, we'd be happier than dead pigs in the sun. But what we got instead was a lot of buying pressure from over the weekend, so it gapped up and then started moving out. Because this had been so dramatically oversold, I bought on a frog box with an intraday position off the low, or here near the right after near the opening, and so now my intraday position is going to look like this. So I'm buying it here, and then my risk is going to be down here below the low of the day. So this is about a 50-cent risk box. And then this rascal just keeps moving up. It gives us that little pause and then a resumption. So I automatically buy the second position here. And that's basically just a money management entry because I've got like 2 risk boxes already in hand with momentum on something that had been in a critical state and had been selling off for the last 1, 5, 10, 30 days. So now this is evidence that people are buying McDonald's on sale. So I want to be part of that. So it moves up now to the peak. It pulls back and holds. By this time, I'm not offended if you take the sniper exit here or the managerial exit here, provided that you re-enter on the resumption. I held it. I was playing a more relaxed strategy with the VWAP. As long as the VWAP was rising, I was willing on day one to let this run a little bit longer. And then I ended up taking the managerial exit and got a bad fill up in here. So by the time this is done, the first position is about 1, 2, 3, 4, right around 5R on the first position, which makes the second position probably about 3R. So that's about 8R intraday. And because the market was so weak today and was sliding the rest of the day, I elected not to have to convert that to a swing trade. If I was going to do that as a swing trade, I would have taken the money that I made on the intraday and deployed about 1/5 of that, or 1/5 of the shares that I was trading intraday, and just keep them. But I elected not to do that today because the market had broad weakness across the board, with the exception of a couple of these swing trades that were interesting. All right. So that's an example of routinely applying the weekend reports for follow-through trades and for trades that we framed, and then starting them off as intraday, and then making decisions on whether to keep them as a swing trade or not. So that's today's lesson. So the weekend videos were did a nice job of laying out that approach to planning and preparation. Okay. I want to shift to a review of the daily report because we're at 9 o'clock now, and I want to get you out of here. Okay. Okay, so this is a review of the daily report. We've already seen the market health check. So we are still in bullish, quiet conditions. We are overbought on all of the long-term measures, but now there is a oversold condition on the 10-day, which is going to be responsible for triggering, not surprisingly, some of these channeling signals in the broad indexes. So you're seeing the S&P is now officially a channeling. So that one, if you play it strictly by the rules, that's buying at the open tomorrow with a 3% initial stop. So that'd be like a $10 stop in the S&P, with the intention of holding that probably for 5 to 10 days or until it's overbought in the routine way. The Euro-Asia blend, that's the S&P for the rest of the world. So all of the large caps around the world are in that condition. And then IEV is the European 350. That's the equivalent of the S&P 500, but just for the European large caps, right? So those are all firing. We've seen the weakness continue now in risk Z, and I want you to just realize how valuable that risk Z indicator is, that when it rolls over at a level greater than 1 or 2 standard deviations, when it no longer continues to go up, it increases the probability of some backsliding. And so these were all times in which the previous strength did not follow through any further, and that signals a changing of the tide, if you will. So we've seen 5 days of sliding prices that corresponds with a decline in the risk index and the risk Z. Now the risk Z is back down to 0.43, so it's not abnormal anymore. And it's in a risk on condition. So the long side is still legit, but some of that earlier enthusiasm of this run up here is gone. So that's the longer term market weather conditions. It's like a storm front has come in. Ooh. Just caught a fly out of the air with my bare hands. And I'm glad it wasn't a yellow jacket. Ooh, scary. Scary goodness. All right, so the 10-day min pain candidates, these are the symbols that have fallen the least from their 10-day high. And the 10-day max pain are the candidates that are the most, the highest percentage away from their 10-day high. So you'll see a lot of, see Chevron in there. Disney gave back some Boeing. I typically favor the max pain candidates because I like to have the pain already built in so that I have something to frame to the upside if it reverses, or some additional pain I can pile on if it starts to fail. But it is legit to look at the 10-day min pains as relative strength leaders. No overreaction system signals, so this has been an orderly sell-off, not a panic sell-off yet. And you'll notice that the ATR percentage had been below 1%, but is now back to 1% even. And in the S&P, that's about $3.50. Still in quiet conditions, though, but not for much longer. Not for much longer. The next most likely place is bullish normal, which still favors the long side, but I wouldn't be surprised to see some additional volatility coming. Okay. All right. Next up is the Dow Tactical Summary. So now we're looking at on the left-hand side of this chart. Once it comes up on your screen, this is where I'm looking for all of the swing trade patterns to fire. Let me let that come up on your screen. So now on the Dow Summary, you'll see all of the tactical mechanical swing patterns, and a bunch of them fired today. So there were plenty of channelings. There was one overreaction in Walmart. And so Walmart is especially interesting because it's a channeling and overreaction. It's also a 5-day down, and it's a max pain candidate, and it offers a 2.9 to 1 mechanical trade frame reward to risk ratio. It broke down. You'll notice over here, it broke down on the 10-day and 1 month trading range. So Walmart is especially horrible right now. Disney gave back a lot of the 1-day gains. It was up like 13% on Friday. Today it was one of the big percent losers, and we talked about that one this weekend too, about the way to trade that frame intraday, depending on whether it broke out or sold off. And in fact, let me see if if TC2000 is going to support us on this one. So yeah, the trade box that we talked about yesterday looked like this, and we were ready to play a breakout to the upside or a breakdown if it fell out of there, with the idea being that if it couldn't hold those prices, then a return back to this trade box down here would have been the least surprising move. And so today it got about 1/3 of the way down. So now I look at that. Now when I make my adjustment for that trade box, this feels like the indecision zone. That if it breaks out of that little box, I'm ready to play Disney to the upside, because there's a lot of people that want to get their money back at 180 and beyond. But if it breaks down further, then that would be the second day of selling, and I would add a second position short. You guessed it. If it broke below the RL10 and the daily the daily low, so anywhere in that second yellow box, I would put a second position short automatically. And then my idea then would be that what it's really going to do is it's going to try to move back into this zone here at the middle of this box at about, let's call it 153. Okay, so I would be I'd be ready to be short here at about 168. A second position short not later than say 165, and then just enjoy the slide all the way down to 155. So that's an example of what we covered this weekend in great detail. Okay, so back now to the Dow Tactical So Disney is very interesting. And then I like McDonald's here. McDonald's doesn't have any structured trade patterns, but it was a big percent winner today, being up 2%, when the rest of the the losers in the Dow were down like 3.5%. So there's some opportunities. Salesforce is still a max pain and a channeling at 7.5 to 1 on the reward to risk ratio. At some point, I just might have to start trading that one. Next up is the ETF 30. So let me let that come up on your screen. T-Mobile just upgraded the wireless networks out here in the boonies where I live to 5G and 4G. So I put the order in today. So I'm hoping that I'm able to solve my connectivity problem here short term. All right. So real estate was a breakdown on the 10-day and the 1 month, and it's number 2 on the auto framer. You'll notice this is interesting that none of the ETFs test out better than 2 to 1 on the auto framer. And the reason for that is that the ranges on them today were so large that you don't get a 2 to 1 reward to risk automatically back to the 10-day high. So this is one of those where it just started failing to the downside with an expanded range, and so the normal rebound opportunities aren't there. We won't see those until the daily range compresses a little bit, and then it's easier to see large multiples back to the 10-day high. But what that tells you is that the downside, the cracking of the ice, this is like a frozen lake in the winter, and you're starting to hear the cracks in the ice underneath your feet. So not a place that you want to be with blind trust. So when I was a kid in Indiana, for one year we lived, actually we lived there for 2 years, I guess, kindergarten and first grade. And we lived next to Lake Wawasee. I just love that name, Lake Wawasee. And in the wintertime it would freeze, and the town folk would drive an old junker car out and park it on the ice, because there were a lot of ice fishermen and ice boats. And so as long as the car hadn't broken through the ice, then you knew it was safe to go out and, horse around on the lake. But when the car fell through, polluting the water, but that's what it was like in the 60s, then you knew the ice was no longer enough to support regular recreation. My dad and I used to walk across the lake to our friend's house to watch football games on the TV, because they had a TV and we didn't. And that was always a big fun, walking across the frozen lake, listening to the ice crunch, watching the ice boats. They're like sailboats, but on runners, and watching them go zooming across the lake, try not to get hit. And so I learned something about setting safety conditions for when the seasons change underneath your feet. Risk management is like that. So XLB is number 1 on the risk reward. It's still, and it broke down a little bit today at -9 on the 10-day NDX, and it's a channeling. So that's going to lead me to look very closely at the steel index and then all the metals, because they sold off so sharply today. If we were to go look at U.S. Steel, for example, so you can now see U.S. Steel has broken down below yesterday's low, and it really finished poorly today, right? So, oops, sorry, let me get this. Oh, I had the repeat button on, so it's giving me. All right. So any breakdown below yesterday's low at like 1730 is automatically of interest to me. This sell-off from the high of the day down to the low of the day is, almost $1.50 on 18. So that's like an 8% intraday sell-off. So we're going to be mindful of that one. And just recently, this thing was up around 20. Oh joy. And the start of this run-up was when it was over here around 12. So there's a lot of emotion tied up in this run all the way to the top, which has already sold back off this much. It's 1/3 of the way back to where it was, 1, 2, and 3. So that's a 33% retracement already. So anybody that is still holding gains from this initial breakout is now more worried about the loss of future profits than they are on the rebound. But then there will be some folks who said, this little sell-off is now an opportunity to buy quality on sale, and they want to play this move back up to 20 and beyond. So what's going to happen? Exactly, nobody knows. But we're going to see tomorrow. But what's going to happen is that this is now a very tightly constructed critical state. So what I'm going to do is now, that yellow box was the critical state we identified way back when. We said, hey, we're going to take that stop over here at around 19. We're not going to let it sell off any further. So that protected our profits on this upside move, which is nice. Now it's back in the middle of this yellow zone. If I can, inside this yellow zone for trading, right? So now what I'm going to do is I'm going to construct a really tight risk box for the intraday trade. And now if it breaks out above 1750, I'm going to be buying it intraday. But if it sells off below 17, I'm going to be selling it. And so I'm ready to go in either direction on a day trade. And then if it breaks out of that bigger yellow box, like at 1640, then that's when I would pick up the swing trade to the short side, and I would resume the swing trade to the upside if it got out above like 1870. But as long as it stays inside this larger yellow box, I'm day trading only. And now my trigger to be directional is that inner yellow box. So that's what we mean by visual box trading and the construction of critical states, and how we use the swing trade frame to set up our initiation of day trades. Okay? So now when we look, if we were to look at U.S. Steel on an intraday basis, and let me turn off the drawing so it's not, you can see just how directional U.S. Steel can be. Look at this uninterrupted move from the peak up here all the way down to the belly in 90 minutes. There was a second trade that was really nice, and that was this one in here, when you had a failure to recover. So what you actually had was a peak in the RL10 and a lower peak in the RL10, and that actually sets up an intraday collapsing dragon right here, which gets you from short about 1760 down to a low around 1730 on as small a risk as 5 cents of execution risk. So there's a 5R trade that's available in here intraday with no intention of playing the long side, because it's not outside, it is not yet outside of the risk box. We don't get interested on a swing trade on this thing till it gets below like 1630. So that's the kind of, what I wanted to show you was that one of the reasons that U.S. Steel is such an interesting intraday trader as well, and it gets very directional. Notice these other very directional moves on the sell-offs, and intraday directional moves on the sell-offs, and intraday directional move on the rebounds. So U.S. Steel behaves very much like a high-tech story stock, but it's U.S. Steel, for crying out loud. So you get some very interesting momentum plays, both intraday and then on the swing basis. Okay, that's what I wanted to say about that. All right, so that's all the interesting ones for me on ETFs. Except I would add Brazil is always interesting. It was down 2.5% today. And you can see the right from the open. So this was the open, and then that initial slide down. There is a hybrid frog trade in there all day. That move right there gives you almost a full dollar of a move on about a 10-cent risk. And you can actually see, if you're looking carefully, you'll see two legs down. There's one leg, and here's the second leg on a second collapsing dragon. And then if you were a specialist in Brazil, like I recommend that you do to understand the context, there's a third potential 5R trade inside there. Brazil just gets very directional intraday. And if we just expand the scale on this a little bit, you'll be able to see it a little more easily. So where you get the hybrid frog entries initially is right about here at the orange dot. You get a massive collapsing dragon here. You're short at 36.80, and your risk is only at the top of the box up here by the PSAR dot. So you're only talking about that's a 5-cent execution risk. So if you just use 10 cents and use the Bollinger Band mean, you won't lose your mind. But you get a collapsing dragon, and you are short at 36.80 with an initial risk at 36.90, and it never looks back until you get down here, till the RL10 reverses down here at 36.30. So that's a 50-cent run, and that's not even counting if you add a second position on the second collapsing dragon here. And then here's a supported spring crossing where you won't lose money. And here's another supported spring crossing where you won't lose money. So EWZ is a beautiful symbol for you to begin to develop the skills for intraday trading with our hybrid technique. So I just want to make that point. Okay? Enough. Back to the auto framer now. There's only 3 that test out well. That's Salesforce, Home Depot, and Walmart. I suppose we could take a look at Walmart. So let me let Walmart come up on the screen for you. So Walmart is in the auto framer. Boy, get some bad lag on this. Let me let it catch up. Boy, it's really slow. Okay, so this is Walmart on the daily charts, and you see the yellow range box that we built on it a while back, and that has clearly violated to the downside. So if you get short when these things fall out of our risk boxes with a stop on the far side of the risk box, it allows you to get in and then manage the position in a low risk way. And then today was a big collapse in Walmart. You see that it took out the previous low. It's already through the Bollinger Band main. It's back down to fair value at 145.5. So it would not be surprising if it continued to fail tomorrow. It would also not be surprising if people looked at this as an opportunity to buy Walmart on sale in the same way that the last time it was on sale, there was a great big run up, and that's just 20 days ago. People couldn't wait to buy Walmart at 146. They couldn't wait to buy it on all the way up to 154. Why? Because it had sold off down to 138, and then this was the second leg up. Well, now it's come all the way back to this key turning point. So if you look at, I look at this region down here at Z-1. That's at the very bottom end of statistical normal. You know, it's down here at Z1. And the last two times that it was at this price level, it had a sharp breakdown and then recovery. And then when it got into here and stalled around a little bit, it had a powerful move up. And now it's failed all the way back to this price level. So now there is an equally likely move from a technical perspective to come back up here to the top of the dragon. It would look like that. Or it could be a move, you know, all the way down to this price level. And so that would look like this. And I think if it did that, it would sell off more sharply than it raises. So this looks to me like a critical state in Walmart, just ready to go in either direction. So we'll come and visit that tomorrow and the rest of this week. But that's what a critical state looks like in its formative stages before it happens. In the same way that this was a critical state over here, because you had the harsh sell-off. It dipped down to the RL270, and then it broke to the upside, and then all it did was just continue to go from 138, pause, resumption, all the way to 153. You know, so that's $25. That's a 20% gain in Walmart. And now it's sold off 10% and is now back in the critical state. The least probable move, or the most surprising move, was if it just went sideways, like it had found its natural resting point and gave us a long sideways move. So a sharp move reversal or a sharp move collapse would be the least surprising move from Walmart, and I'm ready to trade this in either direction from the yellow box. So that's an example of what we will be covering in January on the hybrid trading workshop. We're going to start again in the first week of January with a day trading course, a swing trading course, and then a hybrid trading course that combines the both of those into a hybrid trading. So the prerequisite for the hybrid trading course is that you've taken either the day or the swing with me before, or if you've taken the hybrid trading course, so that I can hit so I'm not doing basic training teaching, but I'm doing the advanced techniques. There's no prerequisites for the day and swing other than the basic training that I build into each one of those. So that's going to be available here in about a week for folks that want to get started on it. If you are a subscriber at the silver level, you will get access to the swing course. If you're a subscriber at the gold level, you'll get access without any additional payment to the swing and the day course. If you are a platinum subscriber, you can have access to the hybrid course as part of your subscription. If you're not a subscriber, but you just want to buy the courses, I will offer those for a separate flat fee. And just send me an email if you're in the sound of my voice and you're interested in that. And that way you can just kind of get it fast and be done. but I'm really designing these to support the silver and gold and platinum subscribers for the long run. And as long as you're a subscriber, you will have access to all those lessons. Each one of those courses is going to have a structured approach, a 2-week lecture each week with homework, and then Q&A sessions on the weekend. And then I will restart a new cohort of students each quarter. So it'll be the first week of January, then the first week of April, and so on, so that you can work together with a study group. So if you're interested in that already, then you should be contacting some of your peers in the chat room, or send me a note and I'll try to link you up with some folks that would be interested in forming a study group. I think it's manageable to do a 2-hour lecture each week with practical exercises during the week and Q&A at the end. And then by the end of 10 weeks, you should have had a chance really to master the techniques of swing trading, then day trading, and then hybrid trading. I'm also going to be starting the psychology course. I just got certified in true storytelling. They've made me a master trainer for that course. And those of you that are doing the Saturday true storytelling working group with the Owls, the course for that is going to let us use the 7 principles of true storytelling to start shaping those true stories that we're telling, but using the techniques of true storytelling to start reframing and restorying our experience in order to shape our reality and our expectations in psychology. And I've already seen it at work, and it's just a really powerful set of tools. And I want to combine that with the positive psychology course that I've become certified in, and start offering a little bit some alternatives for the psychological lessons that we've been doing. Okay, so more to come in January. All right, that's everything I want to. I think everything I want to cover for tonight. Once we get, I got to finish up the daily. Sorry. Lots of things in the fall now. Just going to run straight to the 4 seasons. With that market rolling over the way it has, it's not unusual to see the fall dominate. And then the multi-time frame NDX, you're going to see once again dominated by the selling pressure, with only a few examples of things that are bucking that selling pressure, and that makes them very interesting in that regard. So I want to let that come up on the screen before I talk to it further. This will be the last section for today. Are we up yet? No, not quite yet. Yeah, there we go. So I want you to notice that on the 10-day NDX that's bolded in the box, there's nothing has broken out, but some of these other symbols are really starting to collapse on the the 2-day and the 10-day, and showing some real weakness in here. And you see that on the ETFs as well. But what's really interesting is to notice the ones that are bucking that trend. So you got Intel and Mcdonald's. They have been persona non grata lately, that the rest of the Dow's been crushing them. But here they are actually starting to show some resilience. And also Amgen and Microsoft. To me, Microsoft, McDonald's, and I'm thinking of Apple. Is Apple on there? Yeah. Have been the laggards in the Dow. So they're starting to see some shape there. Now over in the ETFs, I want you to notice that what bucked the trend today, the only things that were bucking the trend were technology, XLK and XLQ, plus oil. So any gains today, any strength was most likely in that in the tech sector, and I think you saw that with. I consider Bitcoin and Tesla really to be the tech superstars right there. So that's the shape of the market. There is very broad weakness, and it is a fraction away from the ice cracking. So I want you to be mindful of that, and until we can get some stability built in here, it's really a tactical trader's market right now rather than swing trading. So keep an eye on McDonald's tomorrow, Microsoft, Tesla, and Bitcoin, and I'll see you in the chat room tomorrow. So thank you for your kind attention.